Today, folks, as I've done every single week on this channel since 2019, we're going to be diving down into my $430,000 Canadian dividend stock portfolio, which I'm expecting thousands of dollars this month in dividends. We're going to be discussing as I've already received a dividend check for $600. We're going to be taking a look at the individual ETFs and individual stocks to kind of get an idea of expected rates of return. As so many of you said, if I invest X amount of dollars, what can I expect over the next 5 or 10 years? But then we're also going to look at stocks I've talked about on this channel this year that are now up hundreds of percent, which is just kind of mind-blowing in the market volatility. But if you are somebody that enjoys tracking dividends, if you're somebody that's looking to fast track your financial independence to perhaps one day retire early, join my journey and consider hitting that like button. But let's get right into this by first and foremost taking the broad view of the portfolio to see where we currently sit at the end of this week, which is basically March 10th. And we can see, guys, that I'm currently up about 0.3%. I'm now only up $1,100 and the portfolio value has just dipped below 400K, but I do have a reasonably sized cash position here, which I haven't reinvested dividends in the last couple months. So I am sitting on already a couple $1,000s in dividends. Plus I'm receiving a few more paychecks. So not all of that has been calculated in, but I'm probably sitting closer to around 430K with the combined portfolio value. But taking a look thus far, I have received a really nice dividend check of $627, and that came from VDY, my Vanguard Canadian monthly dividend ETF, and it's been very stabilized this year. As we can see, we got the dividend of 0.171674 cents. Super awesome, nice to see, but I'm expecting some fat quarterly checks from VOO and SCHD for this month. So I'm just waiting patiently to see when the declaration date comes out on that dividend. But typically SCHD is expected this month. And yeah, it's really cool stuff. But what's kind of confusing me is I've been using this iCloud portfolio tracker, and it's expecting to receive about $13,965 from the whole portfolio, about a 3.53% annual dividend yield, and I don't think that's entirely accurate. I've noticed there's a lot of fluctuations in the dividend with this tracker, and I'm seeing it on my Google Sheets tracker as well. It's expecting me to receive around 5% on my VDY investment. I don't think that's accurate. It fluctuates quite a bit, and my US stocks definitely fluctuate a lot because being a Canadian focused investor, I do have the US dividends being converted from US to Canadian dollars that gets calculated up here, and as the US dollar has been so volatile, it really changes this yield month over month. So I'm very intrigued to see what the total annual income is going to look like for this year. But all in all, I'm still in a really good spot for the year. So let's kind of get into the individual accounts and let's just see what's going on, because there's a lot of red, trust me. But I should also point out that if you want to support the channel, come on over to portfoliospreadsheet.com, use coupon code dividends. You'll get 30% off and you can track your portfolio the same way I do here. It's a one-time payment, no monthly fees, no data tracking, none of that garbage, guys. It's only $14.99. You buy one, you get them all for free, and the finance trackers are sold separately. But again, buy one of each, you get the whole suite. It's super awesome stuff, guys. But getting into my tax-free savings account, I'm still waiting to finish up my taxes so I can max out my RRSP. But getting into the TFSA, guys, where one of my largest VDY positions are, I'm now down 2.44%. On the US side of the border, my Schwab US dividend equity ETF's down 5%, and my VOO S&P 500 index is down 6%. So far, the best decision I made this year in this account, and this could change at any time. I mean, there's nothing saying that my Taiwan semiconductor stock couldn't crash more, but I'm up still 13% on this position, so it is cushioning some of the capital gain blow. So I'm really glad that I made this decision so far. We'll see how that kind of pans out. Consider subscribing for those updates. But let's take a look at the individual positions, starting off with VDY. Let's see the performance against the broader Canadian market. So far, VDY is still up 1.65% this year, excluding the dividends, which I'm not sure how much that would add on, maybe another percent or something. But VCE is up 1.83%. So this is like the counterpart to the S&P 500 index VOO in Canada. And I'm still thinking about adding this to my portfolio just to get broader based exposure. But the performance is so in line, especially if you tap on the dividends. And VCE is also a quarterly paying ETF, and those payments should be coming in this month for people that do own this. But comparing it to the S&P 500's VOO is up 1.34% this year. So it's incredible that the Canadian markets are really stabilizing my US investments. They've been performing exceptionally well, and those dividend checks are really helping me cost average into the market, which I haven't really invested them yet, but now it's kind of getting to the time where I'll probably do that once, these big checks come in from the likes of SCHD. But let's talk about what happens if you invest $10,000, and then we can kind of extrapolate this out. Now, past performance does not equate to future returns. And I'm expecting that the next year or two is going to be probably lackluster in capital growth, which is why I think dividends are such a beautiful thing to have access to right now. But we can see if you invested $10,000, and this since inception, VDY has not been around for very long. It's only been around, this ETF, since right around 2013. But if you look at around 2013, guys, you put 10,000 in today, it'd be worth right around 25,000 bucks. Now you can expand that as much as you like. You put 100,000 in there, you'd probably have around 250,000. So, you can run the math on it, but this is the cumulative return, including the dividends. And these aren't insane returns. They're very average, doubling your money about every 10 years. And it'll be neat to see what that looks like in this volatile market. Again, we'll see what happens over the next 10, 20 years, because my outlook for this is to hold on to these pretty much for the rest of my life. And doing the same kind of component comparison to the Schwab US Dividend Equity ETF, which everyone's talking about right now, even though it's underperforming the market, it is down 4.61%, actually being one of the worst ETF investments thus far this year. But again, we're not talking, this is short term. We never consider macro, movements in these ETFs as anything considerable. We always want that long-term perspective, and the long-term performance, this has outperformed the S&P 500's VOO. But taking a look at this one, guys, we can see the discrepancy here because they're saying the SEC 30-day yield is 3.5%, and my portfolio tracker is saying that, it's actually 3.8%, but that'll surely adjust. But just scrolling down here, they also give you this cumulative return chart, which I really like. So a $10,000 investment 10 years ago, today would be worth around, 30,000, 32, 33,000 bucks. So you run the math on that, right? You put 100,000 in there, you'd have 330,000 bucks. I really like this investment. I think finding these combination investments of really good dividends and capital gains is something that I keep reminding you, is like Kevin O'Leary's old day reminder that his mother always used to say, you want to get paid while you wait for a return. And these ETFs really do that for you. This is why I don't chase like really high option ETFs, because most of them don't have a decade's worth of performance history. And people are like, oh, some of these are outperforming the market this year. And that's true in the macro, but we don't know what a real long-term rate of return will look like in a lot of those. So like I said, I'm not chasing super high yields. I like just slow dollars. I'm not chasing fast dollars. I like the slow consistency, and it's led to really good performance in the longevity of my investments. But taking a look here at the individual stocks like Taiwan Semiconductors, this one, like I said, it fits in my portfolio for diversification globally. I don't have any investments outside of the US and Canada. Now, you could obviously state that Apple and those companies are globalized, but this is truly globalized. Taiwan, they make their money in Taiwanese dollars, and then it gets converted to US when they pay the dividend. So this is true like, country diversification here, and it's really risky, and I'm taking that on, and we'll see how it performs. But thus far, this thing has done exceptionally well since I made that investment this year. And we can see they just released the performance of their revenue for February. And I love that they post monthly revenue numbers. It's not nearly as good as last year. It's up 11.1% year over year, 16% for January. If we just go back to 2022, and I know many of you might not be into this kind of a stock, but just to kind of framework how much the economy slowed, in January here, their year over year revenue was up 35%, and February was 37%. So these growth numbers have slowed down a lot. But Taiwan Semiconductors is a company that's still hiring. They're still seeing revenue growth, and there's just not a lot of companies that can say that. Like, not even really Apple can say that right now. So I do love this company, and I do not want to sell it yet. Now, keep in mind, if the performance starts to come into fruition or something dramatically changes with the company, I would sell it, absolutely. But for right now, I'm looking at about a 1 to 3 year hold on it with no changes in the perspective of it currently. Now, when it comes to small caps, I have an investment in Aduro Clean Technologies, and this one has fallen off a cliff. It's still up 1.1%, doing very, very well since I started buying some shares in it around the $95 range. Now, small caps are a whole different range of risk, but this one just did some dilution. So they raised some money. The small caps do, guys. They have to, issue shares on the market. They raised about $2 million in a private placement deal, and that's good for this company. I'm really hoping this company is going to change the way we think about plastics, and I think it's going to be a leader in the industry, considering the competitors are trading in the $1 billion range. So I'm just watching this one. I'll do some further updates down the road, but some of the intriguing stocks that I've talked about are Stallion Discoveries. This is one that I'm continuing to work with on my channel as a sponsor, and this is me just talking of my own opinion here, but look at this. It's up 184% this year. And as I've told you guys, I'm trying to be more selective about the small caps that I work with. I wish I took a position in this one, but obviously hindsight's 2020. FE Battery Metals, this lithium stock, is up 232%. I just talked about this one like a month or two ago, and oh my god, guys, like it's incredible what's going on in the Canadian markets, because FE is primarily lithium focused in Canada. Stallion Discoveries is primarily a uranium and gold focused company in Canada, and Canada's small caps, the growth cap companies, seem to be more focused in the precious metals and in lithium and commodities markets. So it's nice kind of just seeing what's going on here and just kind of taking a look at broad view of the market here, guys. Most small caps in the US are just devastated right now. I mean, a lot of the ones that I follow, thanks to the collapse of, or what could be a collapse of one of these banks, the Silicon Valley Bank, we're starting to see things like a lot of stocks that I used to follow, like SoFi, getting hit really hard. Palantir, we're seeing a lot of these small caps start to trend to the downside here, and that's expected when the market starts to take a wicked dip. Even crypto took a pretty bad dip there, but across the board, guys, these only just lead up to further buying opportunities. So I'm never going to stop investing in a market like this. As I mentioned time and time again, these are the markets that will make you a millionaire, and I know it's really hard to buy when everyone's screaming how bad things are about to get, and it could get bad, which is why I always sit on a decent chunk of cash. I mean, I'm always going to have a pretty decent sizable cash position so I can take advantage of stocks that interest me. I'm looking at things like MPW right now. I'm looking at buying more SCHD when I get some contribution room to my RSP. I mean, it's always good having liquidity in these markets. So if there's one thing you don't want, it's clearly debt. So hopefully you follow this channel, you listen to people like Dave Ramsey, and you're in a position of power. And if you can get into a power play position, boy, we're going to get rich together, baby. And I hope you follow this journey, and I hope we can do this together. So hit that like button, hit that subscribe button. And as always, folks, I look forward to catching you in the next one.